This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on November the 15th, 2013. Our time is 8:42 in the morning, Mountain. Radio show runs on your favorite radio stations. The shows are archived on Harold's website, rarecoloreddiamonds.com, and his other website, hesradio.com. We have a podcast. It is through iTunes. Go to iTunes, type in World Financial Report on Radio. I bought myself an iPad. I've never had an iPad before. Picked it up a few weeks ago, the brand new one. I've been listening to the radio show on my iPad. I even listened to it on my smartphone, my iPhone. Our show is portable. It goes anywhere with you. Harold does daily market commentary, and you can find that on his websites as well. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. His auction site is hsfineauctions.com. And the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium, worldwide precious metals, their telephone number 1-866-623-2002, website www.pmc.com. This week, Janet Yellen. Confirmation hearings for her to become the new Fed chief, replacing Ben Bernanke. Some shocking news came out that was positive for hard assets. She admitted real unemployment in the United States over 10%. As well, no QE pullback. She doesn't believe in tapering right now, and she's talking about quantitative easing for quite some time. So obviously the markets, the hard asset markets, loved that news. And a little later in the show, we will talk about it in more detail. Two auctions. We had warned you about them, and we had mentioned we would give you the updates. A pink diamond sold for $83 million. An orange diamond selling for $36 million. We'll talk about the diamonds in the second half of the show. But Harold, what a week it was for hard assets, with Janet Yellen coming out and saying basically quantitative easing in place for quite some time. And then we had those record numbers, not only in diamonds, but art auctions as well. So it's very positive for hard assets right now.
It certainly is. Again, the state of the economy is rough at this particular point, but I think Janet Yellen is going to do very, very well. She's an intelligent, brilliant woman. And if she continues with quantitative easing, which I don't see any way in the world that she can't, it is eventually going to be good for the gold and silver markets and the other markets that we're in. So gold shot up about $20 yesterday, or actually on Thursday when the news came out, and it's basically up about $1 so far this morning. Silver rallied about 35 cents. And it's even at this particular point. So we're still trading in a range, but we do know that with the tremendous amount of money that they will continue to print, it will help the gold and silver markets. We just need to get out of this funk that the market is trading in a fairly tight range. But again, I think she'll do a great job. And again, it just goes to prove that there's just no way, Randy, that they're going to be able to do without putting in money every single month to the tune of about $85 billion. And eventually what that has to do is crumble the U.S. dollar, which the U.S. dollar was down yesterday, on Thursday and on Friday today that we're taping the show, and that should continue. There's no doubt that the U.S. dollar will continue to fall, which should push gold prices up substantially moving forward. So all in all, that's a great situation. The hard asset market, as Randy mentioned, there was two tremendous auctions this week. We're very, very pleased with what's happening in diamonds, so I'm ecstatic with that. I would just like to see gold and silver start to break out.
Connect with Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium. Their telephone number, 1-866-623-2002. The website, www.pmc.com. We're taping the show on November the 15th. They're going to be in Edmonton for a seminar on the 18th and 19th about the Canadian banking system. And I'm actually going to be going Monday night. I'm very curious to see this free seminar. Now, the seminar is in Edmonton, completely booked up, but if you would like to get your name on the list for future seminars in 2014 in Edmonton, Calgary, and Toronto, This is a must-see seminar. Bank depositors lost 47.5% of their money in Cyprus. Could a bail-in happen in Canada? There's a certified accountant who has gone through all the books of the Canadian banks, different countries around the world, and put together the shocking truth about the Canadian banking system. If you missed out getting your name on the list for one of the free seats for Edmonton or Toronto, do not worry. In 2014, they'll be back in Edmonton and Toronto and adding Calgary. So get your name on the list by connecting with Worldwide Precious Metals, 1-866-623-2002, or sign up online at wwpmc.com, wwpmc.com. And you can start your own precious metals investment account with them. All gold is allocated either wholesale or premium. They're there to help you maximize profit and minimize risk. They're the experts in this very specialized field. One of the interesting stories you can find in our newsletter, you can get our free newsletter sent to you via email, free of charge every week from Herald or Worldwide. Richard Russell was quoted this week as saying, "I note that talk about debt has simmered down. The U.S. debt is so huge that reasonable talk about it is almost impossible. I believe in the end, the United States will turn to hyperinflation. Its effort to minimize the debt is pretty much the only way to go. The debt is now so huge that I believe there are only two possible outcomes: default or hyperinflation. With the advent of hyperinflation, gold will come into its own. In the end, those who have been patient enough to hold bullion will be rewarded." And he says, ultimately, a new monetary system will come into being, and its core will be built around gold. I think it may be 3 to 5 years before this country moves into hyperinflation, but the only alternative is default. The government will attempt to diminish our debt by way of printing to the point of hyperinflation. The miracle of inflation diminishes the power of debt over time. In the face of America's unbelievable debt, prepare for inflation, rising inflation, and finally hyperinflation. For a period of this third phase, speculative positions in the Dow Jones Industrial Average will be profitable, but only for a short while. In the meantime, positions in gold and gold items should be held. He went on to say, the big picture for the United States is right now underinflation and underemployment. Neither suggest a tapering in quantitative easing. In the meantime, smart money is buying tangibles. That can be seen for art auctions and diamond auctions as well. And Harold, this is a theme that we're starting to hear more and more. People talking about coming severe inflation and positioning yourself now to take advantage of what will be happening in the future, but at the same time, protecting yourself.
You're 100% right. Again, every model shows that by printing money, to the extent that the United States is doing it through the Federal Reserve, is inflationary. So again, we really can't believe the numbers. Here you've got, the government telling you that you've got 7.2% unemployment. Then you got Janet Yellen coming in and saying it's over 10%. So you've got a huge discrepancy there. Again, the numbers just don't add up. But basically, these markets should be action and reaction type of markets, meaning that when this news does come out, the market should react to it. Obviously, it's not happening at this particular point, but it will, because by printing as much money as it does, it weakens the U.S. dollar, and that means that the dollar doesn't buy as much, and that's inflationary. We import in the United States an awful lot of things, and it's going to cost an awful lot more with a weak dollar. In fact, the dollar is so weak that it's weaker against the pathetic euro, which is still 30 or 40% higher than the U.S. dollar is. So, again, it's inevitable that as the dollar comes down and it doesn't buy as much, it's going to bring on inflation. We believe, and we always have believed, that that's the major reason for buying gold and silver is because of inflation. So, again, what it appears that the government and the Federal Reserve is doing at this point is putting Band-Aids on open-heart surgery. What they're trying to do is just keep the markets calm, and deal with problems as they come up. The problem is that the problems are insurmountable. There's so many problems, and so many of them are so severe, like an $18 trillion deficit at this point that'll grow to 20 or 22 trillion by February, to a government that closed down for 2 weeks, to a government that's bankrupt. So, again, at this particular point, I believe what they're trying to do is just to right the ship by printing as much money, keeping interest rates down at zero, and that is eventually going to lead to massive inflation, which is the reason that I have not sold any of my gold or silver. I own a lot of physical gold and silver that I bought 10, 12 years ago. It went to $50 in silver and $19.20 in gold. I didn't sell an ounce of it. Now, it's pulled back substantially, but again, I'm not a trader of gold and silver. I bought it for a specific reason, as did most of my clients, as a hedge against inflation. The inflation has to be coming because of the weakness of the dollar and everything else that they're doing. So, again, it's just a matter of sitting back and waiting until the markets come back to us. You know, the markets were a lot of fun over the last 13 years. We had a 12-year bull market that took gold from $250 all the way up to $1,900. We had a bull market that took silver from $4 all the way up to $50. We know the reasons that the market fell off. It was orchestrated. They raised the margin requirements and made the price come down. But again, the trend is always your friend, and the trend is going to bring the market back not only to where it was, but to substantially higher prices. If I only felt that the gold market was going to come back to the 1900 level, I would have sold out at that particular point. I see gold at $4,000 to $5,000, and it's going to be inflation that's going to take us there. So, again, Randy, I'm not selling anything at this point here. We buy it as a hedge. We don't buy it to trade, and that's the problem that a lot of people make in the gold and silver market. They're trading it, trying to pick lows and highs, and that's not what you do buying gold and silver as a hedge against inflation and currency devaluation. You hold on to it until the trade is over.
It's the insurance policy in your portfolio. Find out about having that portfolio insurance. Connect with Worldwide Precious Metals. The world, financially and geopolitically, obviously very dicey right now. Worldwide Precious Metals of Vancouver, a leading Canadian precious metals bullion dealer recommended by Herald for over 10 years, the experts to trust and work with in this very specialized market. Start your own precious metals investment account today. All gold is allocated either wholesale or premium. Worldwide there to help you maximize profit, minimize risk. You will have instant liquidity in and out of the market with just a phone call. 24/7 online access. The metal can be stored in your behalf, insured to the full value of your investment. Ask about domestic or foreign storage and premium storage in specific coin and bar form. Stored metal is outside the banking system, which is so important. The metal can be stored, obviously, but delivered to your door as well. Worldwide has worldwide access to the physical bullion you want and need in your portfolio today. Connect with them, 1-866-623-2002, wwpmc.com. And we should note that you can get our free weekly newsletter from Worldwide. We send it out via email free of charge every week. It's the companion to our radio show. It is a must-read. You can go through it in 5 to 10 minutes, and you will be completely up to date. I read it on my smartphone. Sometimes I read it on my iPad now, too. It is a quick read, but you can spend hours if you want to. When it comes to the United States and the situation they find themselves in, and one of the reasons Richard Russell is saying what he is, as we mentioned earlier, about hyperinflation and the United States and their debt, is all you need to do is take a look at the numbers. And a person who has is Egon von Greyers. He is out of Switzerland, an advocate for holding gold and silver in your portfolio. And he said this week, we know the main component of the Fed leverage is Treasury bonds, which total $2 trillion, and mortgage-backed securities of $1.4 trillion. We also know that neither the Treasury bonds nor the mortgage-backed bonds can ever be repaid with today's money. The only way the Fed can repay them is by printing more money, not less money. So it's absolutely certain that they will. Then, if you look at the U.S. federal debt, it was only $1 trillion back in 1981, and the tax revenues were $1 trillion. Now, today, federal debt is $17 trillion. Tax revenue is $2.5 trillion. So tax revenues have grown by 2.5 times since 1981, and debt has grown by 17 times. All of this additional massive increase in debt is not creating much in the way of tax revenues. All it has been doing is artificially keeping the country afloat on life support. Without the $4 trillion federal balance sheet and the $17 trillion debt, the United States would not be standing on its feet today. And both of these are continuing to grow. Both the Fed's balance sheet and the federal debt is growing by $1 trillion each year. There's no chance whatsoever the United States can stop money printing. He basically goes on to say they have not only to continue with it, but they will have to accelerate it in 2014. So all of this nonsense talk of tapering is absolutely ridiculous. And Harold, I do agree with him. I think the United States is in a position now where it is very difficult for them to taper, and they may have to increase quantitative easing if they get into a deflationary environment. But one thing I thought of this week, Harold, and I think it is so critical, and this is one of the reasons we advocate hard assets. The same people that are delivering Obamacare in the United States, leading the website, leading Obamacare, and we saw this week what an absolute disaster it is. It's an unmitigated disaster. It's pathetic to think that only around 100,000 people have signed up online on this website, and it is just absolutely stunning how incompetent the United States government and their president, U.S. Barack Obama, are on this issue. These are the same people who have their hand on the lever of the United States' finances. These are the same people who believe they can control quantitative easing and they can taper and everything is going to be okay. And Harold, I'm sorry, after seeing, well, we knew in the past that we didn't trust them, but the truth is, after seeing the debacle with Obamacare and their website, do you trust them? I know I don't. I don't trust them at all when it comes to the finances, because we could quite easily have an Obamacare financial calamity, because these are the same people running both aspects of the U.S. government.
You're 100% right, Randy, as much as I hate to say so, but you are right, and it is a major concern to most people in the United States. Obamacare is a fiasco. He wanted this to be his legacy, something that he would be remembered for doing great things for the American people, and is turning out to be a joke. In fact, if you watch Jay Leno or Letterman or any of the guys at night, that's all they talk about and make fun about. So it's not a funny situation, obviously, because people's health care and lives depend on it, and so many people have lost their insurance already. I mean, the fines for not having insurance and the embarrassment of the government shutting down and everything that's happening at this point just leads us to believe that there's not a lot of confidence in President Obama at this particular time. And again, realizing that he's not going to be reelected, again, we're all concerned as to how bad everything is going to continue to get here. You look at the stock market, it's approaching 16,000, and, you know, people think that everything is great, but it's the insiders that are selling out and the general public that's buying in, because interest rates are at 2% in the bank, and there's very few places that you can put your money in order to, you know, make any money whatsoever. So I don't see good things moving forward, Randy. I suggest being very conservative and not speculating in these markets, because again, we're getting another bubble in the real estate market. Anytime real estate goes up 20% in 1 month, you know that there's something happening there that isn't right. Real estate doesn't do that. That's not the way the market works. So again, what they've managed to do is turn the stock market and the real estate market into a gambling casino, pure speculation, and most people just don't do well in that type of situation.
Connect with Worldwide Precious Metals. Find out why you need hard assets in your portfolio at all times. Worldwide Precious Metals, 1-866-623-2002. Learn about investing in gold, silver, and two items that are starting to get very interesting, platinum and palladium. The shortages of platinum and palladium are getting to be quite shocking. Speak with Worldwide and see what the potential is for those markets. 1-866-623-2002, WWPMC.com. One of the things that I think is very important, And we touched on it with what Egon von Greyer's had to say, also Richard Russell. And that is, not only is the United States in debt heavily, but you have derivatives. And Harold has touched on the quadrillions of derivatives that are out there. Rick Rule commented this week about derivatives. He said, the reality is the United States, as well as most of the Western world, we need to find a way to liquidate or default on some of our obligations. All kinds of promises have been made to all kinds of people and countries, but again, we just can't afford it. In my opinion, politicians and the public will choose to default dishonestly by kicking the can down the road. This means significant inflation. This is what we did in the 70s. The problem today is, can you inflate? But not just inflate, but do it in such a way that you don't bring down the entire financial system, crashing down around you. It sounds easy, just inflate. Well, how many trillions of dollars of derivatives are tied to low interest rates? And what happens when those ticking time bombs are detonated? The answer? It ripples through the entire financial system. The truth is, there might not be an easy way out of this at all. I'm not saying it can't be done. I'm just saying I'm glad nobody elected me to do it. If the Fed, in fact, loses control of the bond market, if the Treasury has an auction and nobody shows up to buy, and the interest rates, despite manipulation, move higher, if that happens, the 25-year bond bubble would deflate and all hell would literally break loose. Harold, with about a minute left in this first segment, this is one of the things that I've been reading a lot of lately, these derivatives that are out there. If the interest rates get out of control, we could have a massive explosion in the financial markets.
You bet. Everything is teed around that, and as you know, that's one of my biggest concerns. There's no doubt in my mind that the derivatives market brought down the market in 2008 and is going to do it again. So it's something that is not well understood. It's an unregulated market. It's gigantic. It is in the quadrillions of dollars. And again, anytime that they are liquidated, there seems to be issues with it. So again, that's something that I've always been concerned of. And I think that it is another roadblock or landmine that we have to be concerned about, because that is definitely a market that's in the quadrillions of dollars, unregulated, and very little understanding of it. So, again, there's so many things out there at this point, Randy, that are concerning, and that's just another one of them that we have to be concerned about.
Speak with Worldwide Precious Metals, the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium, that insurance policy in your portfolio. Find out more today by calling 1-866-623-2002 or go to the website www.pmc.com. It was a very exciting week. Pink diamond selling for $83 million. We had an orange diamond selling for $36 million. We'll talk about it as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us by the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on November the 15th, 2013. Our time is 9:07 Mountain. Radio show runs on your favorite radio stations. Also online, the shows are archived at HESradio.com and rarecoloreddiamonds.com. Our show is portable. It goes anywhere you do via iTunes. We have a podcast there. Type in iTunes World Financial Report on Radio. We go on any portable device where you go. And I should mention, Harold does daily market commentary. You can find it on his websites. You can find it as well on the podcast location. To invest in precious metals, one company Harold recommends, the one and only Worldwide Precious Metals. Connect with them at www.pmc.com, 1-866-623-2002. And Harold's two websites, rarecoloreddiamonds.com, the worldwide leader in naturally fancy colored diamonds, investing in rare diamonds. 1-800-432-1022 is the telephone number to speak personally and privately with Harold. His auction site is hsfineauctions.com. Both websites have been featured on Bloomberg not once, but twice. The featured diamond of the week from Rare Colored Diamonds is a .59 carat round, brilliant cut, fancy purplish pink argyle. And I love the cut on this diamond. You can see the video of it online on Harold's website, rarecoloreddiamonds.com. We have a picture of it in our newsletter. You can get our newsletter from Harold as well. But a stunning, stunning diamond. I just love the cut of this. But Harold, this week, monster news, and we have the stories and pictures in our newsletter. If people want to read more, we'll be happy to send it out to them. Next week, we'll have more auction results. We'll talk about those on the show. Pink diamond, $83 million. We had the orange diamond going for $36 million. What an exciting week it was in diamonds.
You better believe it. Whoever said that diamonds were not a great investment, there's so much money going into diamonds at this point here. I've never seen anything like this. First of all, that orange diamond that was supposed to sell for $20 million sold for $35 million. And the magnificent, close to 60-carat, vivid pink, internally flawless diamond that they estimated would sell at 60 sold for $83 million. These are unbelievable prices, but again, a great indication as to where money is going at this point. You know, the fact is that the markets are so volatile and so risky. This is why money is going into diamonds, because when you look at what's available, just let's look at this realistically. You put your money in the bank, you're getting 1 or 2% return. Inflation's way higher than that. So you're losing money by putting it in the bank. What happens, 1 or 2% is obviously a ridiculous return. It's nothing. So it forces people to take their money out of the bank and put it into the stock market, where it's extremely risky, and the chances are very good that you're going to lose your money. But again, where do people put money nowadays in order to make any type of return or even to preserve capital? Well, we've been bringing to you diamonds for the last 10 years. Colored diamonds, not all diamonds, but certain diamonds are phenomenal investments. And if you look at the auction results, let's forget about the amazing orange that instead of selling for $20 million sold for close to 35. Let's forget about the pink for now that was supposed to sell for 60 and sold for 83. No, very few people in the world have that kind of money to spend. However, the diamonds that tend to go up the most, percentage-wise, are the lesser expensive diamonds. And that's what we bring to you. We bring to you the opportunity to invest in very high-quality, investment-quality diamonds that are priced, you know, for the normal person. Who can afford to spend $83 million on a diamond? Very, very few people in the world could do that. However, $20,000 for a 1-carat yellow flawless diamond, or $35,000 or $40,000 for a 2-carat. A 2-carat diamond, just so you know, only one diamond in 15 million is over 2 carats, and I can assure you, hardly any of them would be yellow and flawless. Those are the type of diamonds that are priced reasonably, that when you look at the auction results, they go up way more percentage-wise than these big diamonds do. And that's what we bring to our clients, the opportunity to invest in the rare color diamond market, and we bring you the type of diamonds that are affordable, that you can afford now, that 10 years from now, you know, will go up substantially. Just so you know, diamonds are not a short-term investment. You don't buy a diamond today and sell it a year or two from now. You're defeating the purpose of doing it. You want to hold on to these diamonds for a significant period of time because they go up tremendously when you do that. For example, a diamond that I bought in 2003, a 2-carat vivid pink argyle that I bought for $350,000 in 2003, is now 2013, 10 years later, that diamond's worth close to $4 million. So the fact is that when you put these diamonds away for 10 years or 15 years or 20 years, they continue to go up because they're extremely rare. There's very, very few of them. And now that the world is becoming more aware of what's happening in the diamond market, the business is worldwide now. It's so huge, you know, and most of the business coming from Europe and Asia, where they have their own financial problems. So we recommend diamonds that are still reasonable in price. You can buy a yellow flawless diamond, 1 carat or over, in the $20,000 to $25,000 range. A $20,000 diamond today will be worth about $80,000 in 10 years from now. So if you talk about retirement funds and stocks and things like that, if you were to put $20,000 into a mutual fund and $20,000 into a yellow flawless diamond, we know that in 10 years that diamond is going to be worth close to $80,000. We have no idea what your investment in stocks will be worth. more than likely it'll be worth way less than what you put into the market. And it certainly wouldn't be 300 to 400% higher like the diamonds are. And then you've got the unique situation of the Argyle mine, where pink diamonds come from. Now, obviously, pink diamonds are in the news because of this tremendous diamond that was sold, and the Argyle tender that happened just last month. So now you've got diamonds, pink diamonds in the news almost all the time, and they're the most concentrated form of wealth in the world. Sure, a 60-carat, vivid pink flawless diamond sells for $83 million. However, the feature diamond, which is obviously not anything close to the diamond that sold this week, but it's still an unbelievable diamond, that would sell in the 100,000 range. So for $100,000, you can buy an Argyle pink diamond that is spectacular, over a half a carat, emerald cut, beautiful color. Everything about this diamond is sensational. And where it's not a $60 million or an $80 million diamond, it's a $100,000 diamond. And what will that diamond do in 10 years? That diamond in 10 years will more than likely be worth somewhere in the range of $300,000 to $500,000. And why would that happen? Because there's not going to be any more of them in 6 years from now. The mine is going to close down. It's called the Argyle Mine in Western Australia in the East Kimberley district of Australia. And that's where this amazing mine is. And the mine is going to close because it's not productive anymore. They're trying to keep it open as long as they possibly can, and they figure they can keep it open for another 6 years. That would give us 6 years to hold on to these diamonds and realize after 6 years there's not going to be any more. Now, what you want to do is give it a couple of years for all these diamonds to run out, and then we're going to find that the diamonds that we own are the only pink diamonds left for sale. Now, pink diamonds are beautiful, especially used in jewelry, and some of the top jewelers in the world are the ones that buy diamonds from this Argyle tender. The diamonds at the Argyle tender are very similar to the diamond that we featured this week. The Argyle tender features diamonds over a half a carat, and that's what this diamond is. It's a .58. And realizing that most of the Argyle pink diamonds, 95% of them are under a quarter carat, this is over a half a carat, and considered extremely rare and extremely valuable. So again, in the $100,000 range, you can own an Argyle pink diamond. We ship it directly to you. You own it outright. We stay in very close touch with you, send you our newsletters each week, our diamond newsletters each month. And then when it comes to time to sell this diamond in 10 years from now, we own 8 Seagull Fine Auctions, the only online real-time auction house that specializes in selling these type of diamonds. So we do it all for our clients, and we have everything available for you to be successful in the diamond market. The first thing you do is you go to rarecoloreddiamonds.com, rarecoloreddiamonds.com. That's my website that shows all of our diamonds. First of all, go to loose diamonds. That will show you our display of loose diamonds. You're going to start off with the yellows. Look at the fancy yellows, the fancy intense yellows, the fancy vivid yellows. Vivid yellows are the highest and best color graded by the Gemological Institute of America. By the way, all of our diamonds are GIA certified. Intense is under that, and then comes fancy yellow. So look at our beautiful yellow diamonds. They're all videoed, they're all GIA reports, and they are amazing assets. They never decline in price, ever. They increase by about 15% a year, and during times of high inflation in 1979 and 80, they went up 500% and outperformed gold and silver. They're a very safe asset. Most of our clients just buy them, we ship them to you, and they put them in their safety deposit box and just put them away for their future. They're portable private wealth. Nobody knows that you own them. They can't be taken away from you. In the United States, they can confiscate gold, but nobody knows that you own a diamond. You can cross a border with the diamond. The fact is that it's the Europeans have always called it real estate in your pocket. So again, go to rarecoloreddiamonds.com, rarecoloreddiamonds.com, go to the loose diamonds section, and you will see our inventory of the most beautiful diamonds. After you've looked at these magnificent yellows, by the way, price-wise, the fancy light yellows, which are known as canary diamonds, they start at $15,000. The fancy yellows are in the $20,000 to $25,000 range. The fancy intense yellows are in the $25,000 to $35,000 range, and the fancy vivids are in the $60,000, $80,000, $100,000 range. Very, very difficult to get. the fancy vivids. There's very few of them available. We have some of the most beautiful vivid yellow flawless diamonds you've ever seen in your lifetime, and these are amongst the best investment diamonds. In fact, when Randy shows the auction results from these type of auctions, yes, we do concentrate on the big, beautiful, amazing diamonds, you know, the 15-carat vivid orange and the 60-carat vivid pink. However, if you look at the auction results for the lesser expensive diamonds, the $15,000, $20,000, $30,000, $50,000 diamonds, those are the ones that go up way more. In actual fact, they estimated that the orange would sell for 20 and it sold for 36. So a nice increase over what they predicted. However, it's not 300-400% that we're seeing on the yellow and on the pink Argyle diamonds. So we recommend to our clients. And who are our clients? Our clients are hardworking Canadians. Hardworking Canadians that just want a fair deal. All they want is something better than what you're getting in the bank. And most of my clients are not cool on the stock market at this point. Again, it's just way too risky for us at this time. So you diversify. You keep some money in cash, but you don't keep a lot of it at this point because, again, the banking system in Canada and every other place in the world has got concerns. There's serious concerns in that market. That's why there's a seminar coming up soon on the banking system. So you've got to put away something for your future. You've got to put something away safe for retirement, something that's going to do well for your family. Yellow flawless diamonds increase by 15% a year, much, much better than the 1 or 2% that you get in the bank, and you don't have the risk of trading stocks. Pink diamonds go up by 15 to 20% a year, except for the vivids. The vivids double every 2 years in price now, and the closer we get to the mine closing down, these diamonds will take off again in price. There's only been one other mine that is shut down that controls so much of one particular type of diamond, and in 2005 when the Cullinan mine closed, where blue diamonds came from, a vivid blue diamond was $200,000 a carat. Now, that was in 2005. 8 years later, they're $2 million a carat. In fact, one sold the other day for $3.5 million a carat, which is what red diamonds sell for. We concentrate on the lesser price diamonds. Even though I do have diamonds as high as 45 and 50 million, the majority of my clients invest 20, 50, 100,000, $250,000 in these type of diamonds and put them away for the future. So again, we want to help you in this area. I've been in business 35 years. We own H. Siegel Fine Auctions, the only company of its kind, rarecoloreddiamonds.com. Our radio show has been on in Edmonton and in Canada, for almost 15 years now. We're a very stable company. Everybody in my company is family. Both of my sons work with me. I've been in business 35 years and married to the same woman for 31 of them. So, again, we're a very stable company, and we're here to help you make money in the diamond business. And as you can see by what happened this week, there's no better investment than diamonds at this particular time. Give us a call and let us help you.
RareColoredDiamonds.com, the website, telephone number 1-800-432-1022, 1-800-432-1022, RareColoredDiamonds.com. Harold's auction site is hsfineauctions.com. Go there and take a look at the past auctions and see what was auctioned off. I should mention that it's very crucial that you deal with somebody like Harold when it comes to investing in diamonds. So many people have the right idea of investing in diamonds, but they choose the wrong company to deal with. And unfortunately, that does happen at times. Harold was the first to bring colored diamonds to our attention. He wrote the very first report back in 2005, in August of that year. And since that time, there have been a lot of copycats come out copying what Harold has done. They are not Harold. They are not Rare Colored Diamonds. They don't have the connections, and they don't have the quality diamonds that Harold does. They also don't have the way for you to eventually sell your diamonds as Harold does with hsfineauctions.com. So if you are going to do the right thing and invest in diamonds, please speak with RareColoredDiamonds.com and Harold Siegel, 1-800-432-1022. Give him a chance to earn your business. This week's featured diamond is a 0.59 carat round, brilliant cut, fancy purplish pink Argyle. And Harold, that's the thing that's concerning me right now a little bit, is that we have people doing the right thing, getting involved in this colored diamond market. The truth of the matter is, though, you're an expert in this field. So many that have copycatted you, they are not experts. They do not have the quality of diamonds that you do, and they do not have the connections. So it's imperative that you deal with somebody like Harold. RareColoredDiamonds.com, 1-800-432-1022. Harold, you were there first, and obviously you were on Bloomberg here in the last 6 months twice. The reason they had you on, you're the world leader when it comes to rare colored diamonds, RareColoredDiamonds.com. We can send those interviews out to the people that are listening today that would like to see them. If you'd like to see Harold on Bloomberg, he was interviewed by Deirdre Bolton and also Carol Masser. We'll send those interviews out to you. And all we can say is Harold is the world leader in this field. Deal with the leader, don't deal with the copycats. Because, Harold, it is so important in the times that we live in. Get what obviously you're investing in, not something that is obviously inferior.
I appreciate you saying that, Randy. In all businesses, there's competition. I have no problems with competition in any way. I just don't want people to be lulled into a false sense of security and realize that there are different types of diamonds and diamonds that come from different areas. India, for example, produces yellow flawless diamonds that are inferior to the South African diamonds, and consequently, they're about half the price. So again, do your homework. Also, go to our website, RareColoredDiamonds.com. We have an investing section, but it's actually turning into a learning center. So we're just finishing it off, and we will have our learning center up and around that will give you all the information you need to make an intelligent business decision about where to put your money. And again, I know where I put most of my money. It's in hard assets. I don't have anything in the stock market at all, and most of my money is in diamonds and in gold, and that's where we believe the future is for, future returns. I do not trust the paper asset market at all, and I don't trust what's happening with the U.S. government in any way, shape, or form. I do the opposite of what they're doing because I don't think that in any way they have a true handle on what's happening in this world. It's almost like they live in a dream world.
RareColoredDiamonds.com, telephone number 1-800-432-1022, HSFineAuctions.com is Harold's website. Two things that we can send to you in our newsletter this week beyond the diamond reports, and I thought they were both very, very interesting, and that is the federal minimum wage in the United States. The peak value of the minimum wage in real terms was reached in 1968. The $1.60 minimum wage in 68 would have to have a purchasing power of $10.77 today. Now, the average today, inflation adjusted, is around $7.25. That's what people are getting today. You can see how difficult it is to keep up with inflation. It's so imperative that when you have investments, they're staying ahead of inflation. You can see when it comes to minimum wages or wages in general. In fact, Dennis Miller from KC Research had an interesting report. He said, take a fictional Joe Smith character. He got his first job in January of 94. He was making $50,000. And today, Joe is in his 40s, raising a family, living paycheck to paycheck. He finds himself living that way. In fact, just to maintain the $50,000 20 years later, he needs to be making close to $79,000. And Harold, the truth of the matter is, a person like Joe is more than likely maybe out of work in the United States. He's been downsized, or he's in a position where, due to the financial crisis, he has a job, but instead of making $50,000 or $60,000, he's making $40,000 now. So he is worse off today than he was in the past. You can see it with the minimum wage, what inflation does over the long term, and you can see it as well when we take a look at a fictional character like Joe, starting out 20 years ago at $50,000, needing to make $79,000 just to even stay even. Most Americans aren't even in that zone, and that would be, I hate to say it, but I would say that's probably the same thing for a lot of Canadians too.
I would think so. Again, we find that, well, in the case of minimum wage type of thing, that does affect inflation. In fact, it's included in the inflation numbers type of thing. So, again, the U.S. economy at this point, just look at the retail numbers. Walmart is not doing well. They don't expect this to be a strong Christmas season. When you look at the stock market going up to almost 16,000, you think that everybody in the U.S. must be euphoric that they're doing well. Nobody's in that market. The general public, the middle class, got wiped out in 2008. They don't have any money left. And that's the people that we're talking about. We're talking about those people that are unemployed or barely making enough money to survive, and God forbid they lose that job. Then that's why the figures are so high, to the extent that 75% of Americans are pretty well living paycheck to paycheck, and over 25% of Americans are living on food stamps. So, again, the situation here is not good, and I don't see it being good going forward. I see, if they continue to print money and do quantitative easing, the stock market will continue to rise. But how does that help anybody? It doesn't help the general public, especially the middle class, that is absolutely getting killed in this time. It's a very, very difficult time. And again, the rich are getting richer and the poor are getting poorer, and it's a really unfortunate situation, Randy.
What you need to is have your investments in the right investment to stay ahead of inflation. Obviously, Harold recommends gold, silver, platinum, palladium, and diamonds. Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. Worldwide Precious Metals, the company he recommends when it comes to investing in gold and silver. 1-866-623-2002, the website www.pmc.com. We have about 3 minutes left here, Harold, and one of the reasons we're not seeing inflation is this is an interesting story out of the UK that I found this week. You can see it in the newsletter. Manufacturers reduce size of festive boxes of chocolates, but the price stays the same. I do my own shopping, and that's one of the things that I notice. The boxes get smaller, or whatever you're buying is getting smaller, repackaged, and yet you're paying the same. That's one of the reasons, Harold, I really believe on some level we're not seeing the inflation that truly should be there.
You're right. They're tricking us. All you have to do is look at a bag of potato chips and realize that it's half full. And that's what they try to do. They try to keep the price the same and just give you less and less. It's absolutely hilarious when you realize what's going on. Then you get a little bit pissed about it. But all in all, there's no way that we're not going to have inflation, because it's very simple. The U.S. dollar falls in value, just like the Canadian dollar is. Both of them are very low, and you're importing products that are expensive. Now, you really want to see how weak your dollar is, go to Europe. Go to Europe and see what happens when you get into London and when you have to convert Canadian dollars into British pounds and experience the currency markets at its fullest. So, again, that's what's happening now. It's going to continue to get worse and worse. It has to. And as the U.S. dollar continues to fall, which, again, it has to, it is going to push up gold and silver. Soon it's going to be a point that things are going to be so severe that the government is going to lose interest in manipulating the gold and silver market when everything else happens, like the derivatives markets falling. So I suggest we continue holding our metals. I certainly am. I would not sell them at all. And I would definitely get into the diamond market. It's the best place to put your money along with gold at this time.
Thank you very much, Harold Siegel, for another great show and your knowledge.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. Find out more about our featured diamond. Go to rarecoloreddiamonds.com, click on featured diamond. Take a look at the auction site, hsfineauctions.com, and we'll send out the newsletter to you. Information on the pink diamond selling for $83 million, the orange diamond for $36. What a week it was for diamonds. Outstanding. And obviously now is a time to look at starting your own precious metals investment account. Speak with Worldwide Precious Metals, the company Harold recommends you use. www.pmc.com is their website. Telephone number 1-866-623-2002. I'll be going to their banking seminar here in Edmonton, and next week I will let you know how it went. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. I'll talk to you along with Harold next week.